Alright, I'm gonna go over my trend review. Basically, overnight action, you had a pullback, it started moving sideways, and then it rallied down. This was basically a false move. But this happens, and you just have to accept it and be ready for it. It's gonna happen, and no matter what you do. So, no matter how good your system is, no matter if you method blah blah blah, nothing really matters. It's always going to happen, and you just have to have the psychology to deal with it. So in this case, you had this break, or break of support overnight. Started moving sideways. You had a lack of demand here. Test, test. This was the up thrust that occurred. After that up thrust, it continued down. So short positions were established here, and got stopped out, and so I think it was right here or one of these bars, and probably this one. So the idea is like, as traders get more experienced, they understand that these moves a lot of times are done on purpose because you need short covering. So you have to trap traders first. So what I believe that's this maneuver here. You have your selling in the background here, and you have your signal here, up thrust, followed by lower low. Looks like it's pretty bearish with calls and all that. Goes down on heavy supply, but all of that is used as an impetus to cause a rally. Meaning, this right here is a maneuver to make sure you go short, so when price goes back up, you cover your shorts, and that covering causes this rally up here, which is what they're really trying to do, because your stops will serve as buy orders to take out the overhead supply. They will serve as market orders. Many will serve as market orders to take out supply and shove price up. So this is the short trade stop out. Then you have 83 volume here. As soon as that occurs, you know that buyers are back in. Low volume pullback. Price makes a higher high. Okay. Demand is in control. Again, low volume pullback, low volume pullback, low volume pullback, and it climaxes up here. Now at this point, you really don't know what's going to happen, how it's going to pull back or anything like that. But what you do know is that this is a little extended. So now price pulls back, attempts, can't get it going, so it comes back down on very heavy volume. Understand that in strong uptrends, even though you have to watch levels, meaning a lot of times when a market moves too far, too fast, there's a tendency to show a very strong selling wave, but the purpose of that selling wave is not really to change trend. The purpose of that selling wave at times can be just to A, shake out, and B, it can be by multiple reasons. One is shake out, the other is test support. It could also be to run stops, which is same as shake out. So in this case, stops that were here were run. So whoever, people see longs right here, right? They say, oh, the market is going up, so they're gonna buy, they're gonna go long. Where's the stop gonna be? Almost always under the prior low. What is targeted? The prior low. It it is targeted. Then it starts moving sideways, and it actually looks bearish, but you have to understand and keep in mind that these maneuvers don't, like if someone's looking at this from a pattern perspective, they will see this as a bear flag. Understand? They see the rally down and they see the sideways consolidation. They say, oh, this is a bear flag. Look at the volume, look at the pattern, look at the this and look at the that. But this bear flag doesn't mean shit. Alright? Because the selling, all it's doing is going down in the range of support, and from there the sideways action doesn't, it could be many things. When a rally occurs to support, you could have sideways movement, and it sometimes is not bear flag, but it's actually reaccumulation. So the first evidence that this was occurring was here. The supply is heavy on this wave and goes down and depletes right there. So I knew something was going on, like I couldn't really put my finger on it, but once this bar occurred, it was time to go long. Because this sideways movement here, we go bar and then starts moving in almost like a pennant, starts moving, it really looked like some type of absorption. And then you get the thrust, and to me it was a long opportunity, nailed it and got out, and then it just starts moving up. And then you can get out. You have to have a method for getting in and a method for getting out, and there are many approaches to getting in and out, but intraday it has to be realistic and it has to be something that's easy, because if you try to count and measure moves and all that, like it will, there's a lot of perceptual distortion, meaning your hopes can lead you to creating targets that are not based on market reality but are based on your desire to make a certain amount of profit. So that's a different topic, but anyway, so this was the trigger. This went up. I believe this is absorption right here. Across this area you have a thrust, inside consolidation, relatively inside, and then expansion. Here, this is where the market is now. I want to see how it does on the pullback, but it's not, I mean, I have to kind of watch it because the ranges have been completed, like the high to low range has been completed. Anyway, so that's the what happened here. Let's go move on to the higher time frame and see what was going on. The higher time frame was the time frame to really watch. It gave the most amount of clarity. This higher time frame, this was the initial accumulation. I explained this from the last video. This was a low volume pullback, then they did a spring, started moving sideways. This was the springboard. It was a rally, and then what really got interesting was this behavior here, where you have a rally volume followed by no supply. Look at this. So now what you want to do is look like this. Okay? High volume, low volume pullbacks. Or, I mean, in the Wyckoff, he says lack of activity, whatever the case is, basically supply is depleted, and you have three attempts, right? One has 10,000, then 600, then another 600. This is telling me that this market is on the springboard. It is at this point that the market is on a springboard. The springboard is a concept that is in the Wyckoff, original Wyckoff literature. It's not in, no, it should be there, but it's not the same as a spring. It is the point at which the market is ready to go into markup. Here, the market is ready to go to markup. And this maneuver here is markup from, I would say about, the hell is the damn arrow? There you go. I can never get this. Alright, so this all of this is markup. This is a markup phase. This right here is the point where accumulation ends. It's either here or here, like one of these two is the point where accumulation ends and markup, the phase is markup phase from either from here or here, but one of them is definitely like, I mean, it's actually, initially it was here, but you know, they pulled back and then tested again, so it doesn't really matter. I'm not going to go into all those details. The point is it's ready for markup. So this is 37 up, 66, 26 up, and then it pulls back basically to test. You know, actually almost exactly where it's supposed to. And then this is the breakout, and now you have a shot at, this is very strong. I don't know if very strong, but I'm just waiting for it to take out this area here, and it seems like it's taking that area. It has a good breakout, and the trend is up. So this trend really needs to be observed. Like this area now, we are in markup. You don't need all these arrows. So now this is no longer range bound behavior or consolidation or contraction. This is a rally, low volume pullback, springboard, bang, markup, pullback, rally again. So pullbacks are a buy, and you have the you basically have a markup. I don't know what else to say. It's just in markup. Anyway, moving on up to the point and figure. All of this was already visible to us in the point and figure, because as I explained in the last video, the base was right here, and that was the breakout. So that's the base, that's the breakout. Then this is some type of test or shakeout or something, but it is also expected to go to this area. See, this was the breakout, so in this area, either this high, this high, this high is where the pullback would have occurred, and that's exactly where it occurred. Then it moved sideways and formed a hinge. So in this action right here, when it starts tightening like that, that means that the market is like on a hinge, or it could also mean that it's the end of the selling or the end of the buying. In basis, it could mean that's the end of accumulation or distribution. So it hinges out like this, breaks out to the upside, has good follow through, and then again is on the hinge. Like the force of the buying is depleted. Just like the force of the selling is depleted here, the force of the selling came from here. The force of the selling depleted, followed by buying. The very strong buying, followed by the force of the buying depleted here, followed by strong selling that just went to a support area. From here, it starts hinging again. The force of this is the point where the force of the buying or the selling is depleted and a decision needs to be made. So that's why the market is on quote unquote a hinge. So it pops to the upside and again it's on a hinge. Then eventually breaks out above. So that's basically the point and figure. And where the bases here are a little bit interesting because these are fairly wide bases. The original target, I'm pretty sure it's been met. I had a target around this area from the original base right here. The count, those targets have been met. So it's a little, I'm not really sure like what's gonna occur here. I don't really know, but I'm watching this behavior. I know price is in markup, and the market was on springboard positions here, here, and it basically just broke out. So support maybe around here somewhere. So around where support should be, like in this area here. Anyway, we'll see what happens. The next thing is the Wyckoff wave. Wyckoff wave went into a downtrend. The red dots represented being in a downtrend, green dots represented being in an uptrend. Anyway, so it pulled back. This was all because of that shutdown, government shutdown bullshit news. And it went down, started moving sideways, but now it's back in its uptrend. You know, whoever's holding up this market is really unstoppable. So the rallies, now it's pulling back. You have support line. These are automatically created, so I'm not messing with them. Where is this? So this is the Dow, and that's the Wyckoff wave. The Wyckoff wave is an uptrend, Dow is in an uptrend. This is very bullish behavior. It went down, test, retest, strength, A, B, C to pull back, and then we'll see what happens. Anyway, that's the trend review to just keep awareness of the market that you trade, and that's all I got. I'm going back to sleep. Bye bye.